Hello everybody, welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, we are traveling. We're on the road. For those of you who watch the channel, the last time we did a video, we were in Singapore. We are in a new destination. We're not in Singapore. We're a couple hours away, 2 or 3 hours. We will have you guess where we are, and then we'll tell you toward the end of the video.
Right, so put it down in the comments so that we have integrity here.
Okay, we apologize if the lighting isn't perfect here. This is, behind us is, I'll give you a hint, behind us is the Indian Ocean. And we're trying to do this to where we have decent light. We didn't bring our light kit or anything with us for the thing. So we're going to try to get through this and hopefully get pretty good video quality. Okay, we have a bunch of data that we just got our hands on from a presentation that has national data about real estate, where the real estate market's going and what's going on. And what we're going to do is we're going to dissect it, talk about it a little bit. Okay?
All right, let's do it.
Okay. So we'll just go power through the charts, talk about them, and then we'll tell you where we are. And we actually have 2 more destinations after this. So we left the U.S., Singapore, now we're here. Okay, first chart. Now this chart is the 1-year change in active housing inventory for sale between July 2023 and 2024. Now, if it's a bluish green color, it means there's a positive change. The highest is 50% basically. And then if it's a low, like if it's a 0, like if it's a yellow color or a red color, it's a negative change. And as you look at this chart, most of the country has more inventory than it did last year. But if you look at Nevada over there, you can see it's yellow. We actually have less inventory in Vegas. Now, Juana, a lot of people are like, oh, this is the housing crash. It's coming. Look at the increase in inventory. This is unsustainable. Juana, this is year over year. Let's talk about that. Is this unsustainable?
This is not unsustainable. This is just seasonality. And even with seasonality aside, what you can see is that Vegas has less inventory. So if you're watching this for what's happening in the Vegas market, when people are looking nationally, they realize that Vegas has even less inventory than everybody else. If you're looking at this nationally, then you can see that, yes, numbers are up nationally, but again, this is seasonal. Well, so no matter where you're watching from, there's something for you.
Okay, so it's July to July, right. So it takes out seasonality.
Well, yes.
It's because it's based on a year ago, which was abnormally low inventory. So we're still, like some of these markets are basically just getting back to where they were 2019.
Right, so I mean, look, we've had an uncommon real estate cycle. I think that's the best way I can phrase this. We've had a very uncommon real estate cycle, partly because of interest rates, partly because of the pandemic, partly because of the economy with inflation. So there's been a lot of things going on, and this is how we got here.
Okay, this is median sales price since 2017. Now, the Crash Bros, remember, they make up charts. And I don't know how their charts look the way they look, but you would think from 2020 to today, prices have gone up triple, and they haven't. This chart looks very reasonable. This is not unreasonable. You can even see the seasonality. The peaks are in the fall or in the spring, drops in the fall, peaks, drops, goes up. So this goes back to basically just in the spring here is the latest data we have. It's probably going to slightly fall nationally and then into October, November, then start going up again. You can see, though, that the peak now, we're higher than we were in 2022, where this was the 4th year in a row the Crash Bros said, okay, this is the year the housing market's going to crash, 40, 50%. It didn't happen. Is this unreasonable, Juana? I mean, median sales price up 1.1% year over year. This chart does not look like the Crash Bros chart. Why is that?
Well, it doesn't, first of all, because it's not manipulated to look that way. It's an honest chart that actually spreads everything out in an even fashion so that you can get accurate information and draw an accurate conclusion. But what you are seeing is that real estate prices are higher than they've ever been.
Okay. This next chart shows the percentage of listings with price drops. Now, if you look at now, of course, what this shows is that 7.2%, which is the highest we've seen in the last 4 years. It was much lower 2021. That was a pretty hot year. So this is another chart. The Crash Bros are saying, hey, this is it. Look at that trend. Boy, 7.2%. Juana, what does it mean if 7.2% of listings had price drops?
It means that 93% of listings sold with the original list price. That's pretty awesome, you guys. I mean, think about it. this is real estate. This is big numbers. As we like to say, everything in real estate is negotiable. So that means that 93% of listings were able to sell with their original list price. That's not to say that they're selling at their list price. That's to say that they were able to sell with the original list price without having to do a price reduction to entice a buyer to make an offer.
I would say this. The correlation is the longer house is on the market, the more price drops they're going to be,
Right.
potentially. And then you have to take into account there's always a small amount of sellers who always want to start at some ridiculous price because of something they learned about, we got to start high and then drop the price,
Right.
or else we don't sell it for the right amount of money,
Right.
or something
So
crazy.
what we hear from sellers, often we hear things like, let's see if we can get one of those California buyers who doesn't know the value of property.
Yeah,
That
that's the
doesn't
one we
happen.
hear all the time. Oh, the California buyers will
They don't
pay
know
$1
any
million
better.
for my $400,000 house
Yeah.
because they don't know. They would see this house and think, well, if this is California, it'd be $1 million. I'll just pay $1 million for the house.
Right.
I can tell you in the 3,000 plus listings we've sold, that's never happened.
Right.
No one's ever overpaid by that much money.
Right.
Not even close.
So buyers are not ignorant, is what we're trying to say. The other thing that happens is sellers want to give themselves room to negotiate. That's another thing. So that's another reason why sellers might start high. Another reason is just going fishing, right? See what they can get. They'll
know.
say, well, let's just try it for whatever time period, and then we'll go ahead and change the price to market value.
Could you imagine selling produce? Hey, for the first week, let's put it at $10 a head of lettuce. And then after 2 weeks, let's drop it to $5. And after 2 weeks, no one wants to touch it because it's rancid and spoiled, right? So that's a terrible strategy. Okay, Wanda, this next chart. 8.5% of U.S. homes are worth $1 million plus. Back in 2014, it was just under 2, so it's more than 4x. This is a combination of two things. Home prices going up, one, and more homes being built in the $1 million price range. Let's first talk about that. Why are more homes being built in the $1 million plus price range?
So, because there's a market for them, honestly. So we've got a market for luxury homes. So what does that mean? Well, we've got a market for larger homes, more well-appointed homes. So builders are building them. That's the bottom line. They're more profitable for builders to build, right? Because they've got a bigger profit margin, so they're more likely to build them. The other thing is we have had inflation, so that's another reason why we have $1 million plus homes. So the cost to build them is higher, and that cost is a variety of functions between shortage of labor and materials and scarcity of land and how long it takes to get various approvals for the building process. So all those are functions of that. And then we also have the demand. We have the demand for a luxury product. So all those things combined plus more get us here to where we have more $1 million plus homes in the U.S. than we've ever had before.
What is the average? You're a broker in a luxury firm, the corporate broker. What are the deal sizes you're seeing on average?
So, we're seeing more $3 to $5 million than anything else, honestly.
Okay, so for you, it's not 8.5% of your deals are over $1 million. It's basically all of them.
Right. For us, it's
90-something% of them
Right.
are more over $1 million.
right. We have very few that are under $1 million, and the ones that are under $1 million, they're from our over $1 million clients that have other properties to sell.
What are the percentage of these getting loans?
So that's a great question, actually. So almost everything. Well, so I guess I'm gonna answer it this way. Under 3 million, a lot of them are getting loans. 3 to 5 million, a few. Anything over 5, nobody.
Okay, here's another chart. This is the U.S. and Vegas basically wrapped into one chart. Luxury versus non-luxury. The red line is luxury. Now this is year-over-year change. So the only time prices have dropped is that where it's below the zero line, and then where they went up by a percentage was above the line. Luxury, pretty much for the last 4 years, has been outpacing non-luxury. So this right now it's 8% year-over-year. Non-luxury 3.8%. Why are luxury homes appreciating faster than non-luxury?
Again, same kind of thing. We have a lot of demand for luxury and not enough product, right? Vegas is not immune to that. Las Vegas has a larger luxury market than we've ever had before, and we have more demand for a luxury product than we've ever had before. We have entire luxury communities where just the price of lots is $1 million or more. So the luxury product has so much demand out there. There's not enough product. There are a lot of people willing to purchase that, whether they're for people who want to occupy those properties full time or their second homes, whatever that is. And Vegas is not the only place, right? I mean, we have lots of places across the country that see that demand, and that's a function of a lot of different things. Part of it is just affluence, right? There are a lot of people who are affluent, and it's not just Americans, it's people from all over the world that want to own these properties, whether they're in Las Vegas or they're in San Diego or Myrtle Beach or wherever they are.
Okay, this is the market prediction for the U.S. Vegas looks about the same from Zillow. You can see one of the problems with the chart is the bottom is 150. So if it was 0, this chart wouldn't look as drastic as it does. Home prices obviously have gone up. This chart goes back to 2000. Mm-hmm. So it is years and years. The reason why it looks steeper is because they stretched out the prices this way and they squished them this way. That's how the housing bros make their charts look so steep. They squeeze the years in and make it look like it's increasing at a faster rate than it's actually increasing at. They're predicting a couple percent per year for the next 20 or for the next 12 months. Why is that?
So, look, I don't care who it is. Everybody's predicting a price increase in homes, whether it's a couple percent or more.
Yeah.
Everybody sees real estate increasing, and I think that's the big takeaway. The number is less important and more that the trend is where the value is.
Okay, this next chart, this is for the U.S. market overview. This is a fun chart. Okay, this goes back to 2018. Now, where you see that this is not home prices, this is how hot the market is. Okay, the little gray dots is a neutral market. It's not even a buyer's market. It's a neutral market. Okay, the little orangish dots are a seller's market, and the red dots are a strong seller's market. Since for the last 6 years, we've either been in a neutral, seller's, or strong market nationally in the U.S. You can also see the seasonality. It gets hotter. The market picks up in the spring. It cools down in the fall. It's a great chart to show that. You can see how we're on the decline now because we're going into the spring. Juana, what do you foresee for next year? And let's say interest rates are below 6% by next February or March.
Oh, I see a lot of excitement. I see lots of transactions. I see lots of people coming into the market to buy who maybe have been sitting on the sidelines. I see people who have been sitting on the sidelines to sell, wanting to go ahead and swap out properties once the interest rates are more to their liking. So I see good things on the horizon as far as properties trading hands. As far as the number of properties available, I don't see that. I don't see a difference there because this is not going to keep up with new construction, right? So new construction is not going to be able to keep up with the demand. What we will see is more transactions as far as people trading homes.
Okay, this is the same chart but Vegas. It pretty much tracks nationally. Remember, we were in a super hot market in all of 21 and first half of 2022. We never went to a buyer's market. The market just kind of moderated back to a normal market, which is a seller's market. We're in a seller's market in Vegas. We're still in the seller's market, which is pretty normal. Vegas probably going to track what most of the country does, maybe a little better since we don't have to deal with like some of the South where it's a little softer.
Right. So Vegas, I think, is going to do well. If anything, I think Vegas is going to do better than most places, and a lot of that is our economic growth, right? There are a lot of good things happening in Las Vegas. There's a lot of growth, and a lot of that growth actually is in the high end because we have a lot of high-income earners coming to Las Vegas for a variety of reasons. So that's going to track well for the high-end homes in Las Vegas. That's not to say that the rest of the price points won't do well. They'll do very well also.
Okay, this last chart is very fun. It's my favorite chart. Okay, these are 4 different markets. Okay, this if you go all the way to the left on the bottom, buyer's market. These are the markets where it's actually a buyer's market. They probably have downward pressure on prices. Buyers are having not a lot of competition. Homes are staying on the market. These are the markets the Crash Bros make constant videos about, saying this is the housing market. It's getting ready to crash. The whole country is getting ready to crash this way. But it's only really, you can see, about 10 markets out of over 300. that are doing this. It's basically that one dot in Texas is Austin, and then a couple in the south, and then basically a lot of Florida, right? There, that's the blue. Neutral market. This is still mostly the South and Sun Belt, okay, but nothing in the West. Sellers market is basically most of the country. Most of the country still, sellers have an advantage. Strong sellers market. Some of these markets, let's talk about these. Literally all of the upper Midwest and the Northeast are a strong sellers market. That's kind of interesting because remember, a lot of these places had people flee. And then these West Coast cities, which are basically San Diego, the Bay Area, which have returned, Portland, Oregon, and Seattle are super strong sellers market. Vegas, of course, is in a sellers market. What do you think is going on in San Diego and parts of the Northeast and Seattle, places like that? Like, why all of a sudden are they hot again?
So they're hot again for a number of reasons. First of all, their economies are doing well. Second of all, they have scarcity of product, right? Which is probably, I should probably name that first. Scarcity of product is the biggest item. And then, of course, they're just attractive places to live, right? People want to live there. There are jobs there. The economies are doing well. So all these things put together make it for a strong seller's market because you have supply and demand, right? More people want to buy than want to sell, so you've got that going on. And remember, real estate is hyper-local, so you may be in a market in the South that shows that it's a buyer's market, but you may be in a seller's market and vice versa in other places. It is hyper-local, so that is something to keep in mind.
Okay, tell them where we are.
We are in Bali.
Bali is in Indonesia. It's a resort area of Indonesia. It's its own little island. It's very cool here. You can see the ocean behind us. We had to film. We didn't bring a light kit, so it's tough when to film. We couldn't film during the day because you wouldn't be able to see us here. And outside, it's just brutal with the wind and noise and stuff like that. So we are going to a different location, and then we'll make some videos, 1 or 2 videos there, and then we're going to another location. This is sort of our, every year in May we did a big Japan vacation.
We did.
And then, of course, now this is sort of maybe Southeast Asia because we're just in Singapore. A lot of you know that around January timeframe we were in Tahiti. And we were in Australia for a while. So we do quite a bit of traveling. We keep doing the videos there. If you want to guess where we're going next, that would be pretty fun too.
Right.
And but I thought the data was very interesting. It dispels a lot of the Crash Bro stuff. Remember, they basically only take the worst of it and then they make charts. They make up their own charts that make it look fake, and then they try to scare people. I did see a tweet. I won't put it up because I probably won't be able to find it. But it's basically somebody saying, if you're thinking about buying now, don't do it. Wait 2 years, and you'll be able to buy home at bargain prices. I want to go back and find a tweet from 2019 where one of the Crash Bros says, "Don't buy today. Wait 2 years." And then you remember, homes are 40% more expensive than they were in 2019.
Right.
And you could have got a 2% interest rate back then.
All right. So if you're having fun with our videos, please remember to subscribe, hit the notification bell, like the video, share the video. Comment on the video, give us suggestions for topics, give us suggestions for travel, and we will see you on the next video. Bye.
Bye.